having known all this theory, let's try to apply that into a case study. Okay, for example, Mr. Ng, he wants to invest for his child's education, which he requires in 15 years' time, and he wants to accumulate 200,000. He has a budget of 15,000 a year. So at the same time, he wants to also ensure that in the event of a premature death or disability, he is still able to meet this 200,000 education funds for his child. Well, he is open to all options as long as he can achieve his goals. So he's presented with three options. One is an endowment plan with a payer security. So the payer security here is actually like a rider to protect the payer. So in an event of an unfortunate event that happens to the payer, the premium will be waived, and the policy will continue to run on its own. The second option that he's presented with is an investment link, again with a premium waiver. And lastly, he can also choose to invest in some unit trusts, and at the same time to purchase a 15-year term policy to cover him for this 200,000 for this 15 years. And how do you assess which is a suitable product? Okay, first of all, ask yourself, do all the plans provide insurance coverage? Yes, they do. Okay, for endowment plan and the investment link plan, both have riders attached to it to actually protect the payer. And for the last option, basically is to actually buying a term and then investing the rest into a investment product. And are all the plans within the budget? They are, because his Mr. Ng's budget is 15,000 a year, and all these plans presented below 15,000. So are they all suitable to his risk preference? According to the case study, Mr. Ng doesn't have any specific preference whether he is a risk taker or not. So he will have cleared this as well. So what is the conclusion? In fact, all options are suitable and possible. He can either use a bundle product to meet his concern, or he can also buy a term to cover his insurance needs, at the same time to invest in other investment products to accumulate for the education funds. So most important of all, discuss with your financial advisor to find out the benefits and the limitation of each option. And if are there any other options other than these three that can also meet your goals. Okay, do not be attracted just to the benefits, but do pay careful attention to other features and especially the possible downside of the investment.